All right, Christina, can you hear me? All right. A quick recap of what we did in the learning outcome 1. We look at who are the main stakeholders, and we know with health and social care, we're looking for people like service users who are patients. We have patient relatives. We have clinicians who work in the hospitals. They are all stakeholders. So we've looked at that. And what we're going to look at today is to try and analyze the financial information available and evaluate its use for decision making and control. We will also try to assess areas to be monitored and demonstrate how this can be achieved, and then analyze different types of financial decisions to be made and demonstrate techniques to support that.
Should I type? I can't type.
Can't hear you.
Are you okay?
No, I can't hear you.
We can hear you now, I think.
Can you hear us?
Can you hear me now?
Yes, yes. I can, yes.
Lovely, lovely, lovely. So, Stephanie, what we're going to do is to, let me allow someone else to join. Right. What we're going to do is to look at learning outcome 2. And all that we need to do is to analyze the financial information available and evaluate its use for decision making and control. Learning assessment criteria 2 will try and assess areas to be monitored and demonstrate how this can be achieved. And then finally, we'll try to analyze different types of financial decisions to be made. And we'll try and demonstrate techniques to support such decision making. Right. So that is what we're going to do for today. Let's look at our second slide. Right. Because it's health and social care, we are not going to use financial statement of any other company. We're going to use NHS information so that we will be able to appreciate NHS as a public sector organization and their requirement to report every single penny that the taxpayer gives them and how they account for them and how they use them. So we're going to use the NHS as a case study. Right, with the NHS Act of 2006 requires all NHS organizations, be it a foundation, trust, or GP surgery, whatever it is, to prepare financial accounts every year. And it's the Secretary of State has to give approval, right, and make sure that all the accounts give a true and fair view of the state of affairs of the trust, showing all income and expenditures for the trust. And these are often in the public domain. So if you like to find out about financial information about any NHS trust, you will see them on the internet, because these are meant for the public, because the NHS is funded by the taxpayer, therefore they have to be accountable to the taxpayer. So you see all those information on the public domain. You can Google it and find it. We will try and use NHS Works Essex financial information for our study. Right, so let's look at the next slide. Well, at the end of every financial year, every public sector organization, including NHS, are required to provide income and expenditure accounts. All the taxes that comes in, all the money from national insurance, car parking charges. Those are all income that comes in. So at the end of the year, they have to account for all those incomes and how they use it. So we'll have their income and expenditure accounts. At the same time, they have to give us the balance sheet, which show us the financial state of the trust. And then they also have to provide statement of changes in taxpayers' equity. Equity is just shares that are being issued out. And then they also have to provide statement of cash flows for the year end. So these four financial information are always on the public domain, and you can find them anywhere. So we will use one of them to be able to see how best we can use those information to make decisions. All right, let's look at our next slide. What you are seeing in front of you is not made by me. It's a financial statement of NHS West Essex in London. And it's for the period March 2010. And I tried to get information from 2008, 2009, and 2010. This will enable us to be able to assess the performance and the financial standing on NHS West Essex between 2008 and 2010, and to be able to see if they are doing well or not. So that is a screenshot of the financial position as at March 2010 of NHS West Essex. I've broken down the financial statement into different slides, so bear with me. If I need to come back, I'll come back for you to see. So we have the net non-current assets. I won't say non-current assets that are more or less fixed assets, something that you can see. You've got property, plants and equipment, all the equipment in the hospital. They are all non-current assets. And they've got trade and other receivables. So the total non-current assets for 2008 is 89,244. 2009, it is 82,229. And then March 2010, it was 53,063. All right, so these are total non-current assets. Let's look at the other part of the financial in the next slide. We finished with the non-current assets. So look at the current assets as well. We've got inventories or stocks for the different years. 2010 is 452, 2009 508, and 2008 583. I'm just going to go through with them before we start analyzing the data, because 2.1 is asking X to analyze the financial information available and evaluate its use for decision making and control. So I'm first trying to show you the financial statement. We look at the non-current assets in the previous slide, and then we are now looking at the current assets, right? So total current assets for 2010 was 13,000. 2009 was 5,180, and then 2008 was 5,805. So total assets for each year: 66,000, 87,000, 95,000. We're going to use this information to analyze and then make decisions out of it. So if we want to come back, we will always come back. So don't worry at all. So we've looked at current assets and non-current assets. The non-current assets are fixed assets, and the current assets, they're easy to pick up cash and cash equipment. Right, let's look at the next slide. In the balance sheet, you are after the fixed assets and then the current assets, you have current liabilities and non-current liabilities. So with the current liabilities, we've got 2010, 2009, and 2008. So total current liabilities for 2010 is 35,000, 29 is 31,000, and 2008 was 31,000. Don't get worried about the figures. When we start analyzing, you understand what I'm going to talk about. So I'm showing you a sample of the financial statement of NHS Works Assets. That's all. After that, we'll see how we'll be able to use this information to make proper decision. Right, so the next slide is about non-current liabilities. I told you we have current liabilities and non-current liabilities. We have trade and other payables, provisions and borrowing. So total non-current liabilities is 19,766 for 2010, 19,473 for 2009, and 20,147 for 2008. So total asset employed figures have been given below. So these are, well, this is what is called the balance sheet for NHS.
Why are they non-current liabilities?
These are non-current liabilities.
What does that mean?
Why? Why aren't they current liabilities? Because
Right.
if you're borrowing something, it's a current borrowing, isn't it? You haven't paid it off.
Yeah. So look at the current liabilities, right? Trade and other payables, other liabilities, borrowing are all current. And then we have non-current liabilities, which are trade and other payables, also provisions.
But it's got borrowing. What's the difference between a borrowing that's a current liability and a borrowing that's a non-current liability?
All right, we have borrowing, which are non-current liabilities, are things that, when we say liabilities, anything that is owned by the organization is a liability. Anything which is for you is your asset. So any liability which is not for the current financial year, you've got liabilities for the current year and liabilities which are not for the current year. They are non-current liabilities. So in every financial year, we have current liabilities, things that have been borrowed for this year, which will be taken care of in that very financial year, and those that will be taken care of by the following financial year, which is not current. Is that clear?
Okay.
Yeah, okay, thank you.
Okay. So I'm just taking you through balance sheet of NHS Works Assets, right? And then we have taxpayers' equity. Let's look at the analysis of the financial information available. So I've shown you the information which is now available, right? And we're going to use that financial information to make decision. And this decision can be taken by one, management of the trust. It could be used to take decision by suppliers and lenders. Employers will also use it. And then financial journalists and commentators will also use it. That is why it's in the public domain. So management will use it for their internal decision making. Suppliers and lenders will also look at the balance sheet and decide whether they have to supply things or not. Lenders will also decide whether they should lend the trust money or not. Employees are also interested in the health of the financial position of the trust. And other third parties like journalists are all interested. So there are so many stakeholders who are quite interested in the financial information of every organization. So we will try and then look at how the financial information of NHS Works Assets that I have shown will be used to make sound decisions. And if we need to go back, I'll go back and then show you the statement again. So let's look at the next slide. So for decision making, we have management who are happy to use it, suppliers and lenders, employees, financial journalists and commentators. They are all so keen to be able to see the financial statement before they can decide. For instance, if you want to buy share in an organization, you would like to look at the financial statement to see if you buy shares in it, it will yield you any dividend at all. And then employees will also try and look at the financial situation. Is it something that I can be part of? Is this something that can pay my pension in future? Is this something that will ensure my regular income? So employees are even interested, and they will make decisions as to join the organization or not based on the financial information. And management are also going to use the same thing to decide how to take the organization forward. So let's look at the next slide. Now, financial management is broken down into three main in terms of decision. One, we have investment decision, financing decision, and dividend decision. If you look at the investment decision, if I want to put my money in the trust, I'm going to look at their financial statement, look at the profit they've been making for subsequent years, and then decide, is it worth putting my money in? So for investment, we need financial statement. And then financing decision. If any bank wants to finance NHS West Sussex, they are going to decide, looking at the financial position of NHS West Sussex, their balance sheet, is it something that the banks will be willing to put money into it? So in terms of financing the organization, you have to base all your decision on the financial information provided by the organization in a particular year. And then if it's a public organization that you can buy shares in it, you are still going to look at their financial position and decide whether you want to buy shares, because at the end of the day, you're going to get dividend from your investment, right? So decision making that we're going to analyze can be broken down to investment decision, financing decision, and then dividend decision, right? Let's go on to the next slide. I've put an example here. It's an example showing the liquidity position of the trust, which is calculated from the financial information that I show you the previous slide. I've taken your total current assets, your total current liabilities, and then I will be able to see the liquidity position. When we say liquidity position, the cash position that I mean the ability of the trust to be able to survive. So there is a ratio which is called the working capital ratio or the liquidity ratio. Now this ratio is just all current assets divided by the current liabilities. So if you go back to the financial statement I show you, in the balance sheet, we have current assets and current liabilities. So if you want to make any decision on the trust in terms of maybe buying shares, think about your dividend. If you are a bank and you want to loan them money, or you are a management and you want to decide, you can use the working capital ratio as your decision-making tool. And the working capital ratio is simply subtracting, dividing the current asset by the current liabilities. And because this information are in the public domain, you can just go online, find their balance sheet, get their current asset divided by the current liability, and then you will be able to know the liquidity position of the organization. So if you look at here, I've looked at the current assets for 2013 and 2010, 2009, and 2008. And I've looked at the current liabilities for 2010, 2009, 2008. This was done so that I'll be able to at least look at the liquidity position of the organization from 2008 up to 2010. Then I can make my decision that the liquidity position of the country, of the organization is so sound. I'm free, I'm confident, I can buy shares. If I'm a bank, I can lend them money because I'm confident that my money will not go to waste. And if I'm a manager of NHS Trust, I can see that the financial position of the trust is very sound. And therefore, if we want to do more investment, we can invest. So I've taken this snapshot from the balance sheet by calculating one of the popular ratios, working capital ratio or liquidity ratio, which is simply the current asset divided by the current liability. So I've done it for 3 good years. And we've got 0.37 for 2010, 0.16 for 2009, and 0.18 for 2008. Just dividing the current asset by current liabilities. Now, look at what I wrote there. Comparing the liquidity ratio from 2008 to 2010, there is an increase in the ratio, indicating high cash level, which could be put to better use, such as investing in non-current assets like building more theaters, getting more MRI scan, and all those things. So from 0.18, it came to 0.16, now it is 0.3, which means that the liquidity position of the organization is improving. So this is some of the ways that we can analyze, lay hands on the financial information of the organization, and then try to analyze. You can only analyze and take decisions using basic ratios. Now, of course, I said in the second lecture that we are not accountants. We are healthcare managers or trainee healthcare managers. So it is not our duty to prepare the financial statement. So this module is just trying to help you to understand and be able to analyze the financial information if they are provided. So it would be wrong as a manager for the accountant to bring you the information and then you have no clue. So what we are doing is not doing accountancy, but to be able to understand basic financial information provided, and then so that when we are taking decisions alongside the financial accountant and managers, we can contribute and at least help make sound decisions. So having the balance sheet, you can quickly understand what is going on. Looking at the liquidity or working capital ratio for the 3 years, you could see that, well, comparing the ratios from 2008 to 2010, there's an increase in the ratio indicating high cash level, which shows that things are moving on well. Right, so these are some of the ways that we'll be able to analyze financial information in making decisions for ourselves. And we try to use the NHS web sources financial information to explain the process. Right, let's look at the next slide and see what we can make out of that. The next slide looks at learning outcome 2.3. So 2.3 is just analyze different types of financial decisions to be made and demonstrate techniques to support decision making. Right, analyze different types of financial decisions to be made and demonstrate techniques to support decision making. Right, there are different types of decisions. Number one is the investment decision. If you want to do investment, it's a crucial and a very serious decision to be made, because you can either do it and lose all your earnings or your savings, or you can invest and make huge profit coming out of it.
However, this is a government-run body. It's not a company. So who would be making investment decisions for NHS West Sussex?
Right. I'm using the NHS West Sussex as a case study because the title is Managing Finance in Public Sector. So I'm just using NHS as an example. All public sectors do investment, and even in the NHS, sometimes people invest in them.
You can't buy shares in the NHS, can you?
No one can buy shares in it, and no one can invest into it. Only the government can put money into the NHS.
Is that right?
Because it's basically a government-run organization and it's not made for profit. Of course, in principle, you cannot invest anything in NHS and make profit. No, because it's there to provide service, right? And it's not there to earn shareholders' income and the rest. But we are using as an example. Thanks for chipping that in. We have to get it straight. But I'm using it as an example because I don't want you to use a different business organization as an example for a health and social care module like this. So let's all get it straight away that you can't buy shares in the NHS because they are not there to make profit. They are there to provide service to all taxpayers, right? That is accepted. Is that all right?
Yes.
Yeah.
Yeah. Well, I understand that, and it's the same for social care. So when we're looking at the balance sheets, when we're management, surely it's not our decision whether or not we're going to be making a good investment for dividends or a good investment for return. Surely it's that we should be working more efficiently from the good investment.
Yeah. That's all right. That's fine. All right. So if you are taking investment decision in general, let me say that. In general, in determining short-term management of cash and account receivable, that is the investment decision. And to do that, ratio analysis is one of the things that will help to determine the trend or variation of current assets and liquidity to plan funds and cash flow, as I've just shown in the previous slide. So for capital investment, which is a long-term project, the cost of a capital analysis, such as the net present value, internal rate of return, and cost-benefit ratio, will be used for investment decision, right? For other public sector organizations, for investment in long-term project, you wouldn't use the ratio analysis, but you use what is called cost of capital analysis. And we will look at the net present value, internal rate of return, and cost-benefit ratio. These are some of the tools that will be used, right? So one of the ways of making decision is when you are making investment. Let's look at other decision-making methods. Apart from investment, you can make financing decision. So the first one was investing. Second one is financing decision. When making a financial decision, the manager must determine the best financing mix. And the important element to consider in making such decision is to look at the nature and risk of the business operation. So when you're making any financial decision, the nature and the risk of the operation might be taken into consideration. And then we have to look at the capital structure, which is the debt to equity ratio, right? As well as the length of time that the assets will be needed.
And the supply.
Cost of alternative financing. So if you have £1,000, you decide, if I put this £1,000 in buying shares, how much am I going to earn? And then if I put it in any alternative business, that running the transport business, how much am I going to get? So in making financial decision, we must always determine the best mix, where to put our money and then make the best profit out of it. So apart from investment decision, we have financial decision as well. Right. Let me look at the next slide. Now, the next slide is looking at learning outcome 2.2, assess areas to be monitored and demonstrate how this can be achieved. How financial monitoring is or could be achieved. That is what we're looking at. Now, for financial monitoring and control, budgeting is one of the ways that we can monitor and control proper financial management, delegation, and internal control, and auditing. These are the 4 key things that can be used for monitoring and control. Right. Let's go to the next slide. Let's look at the budgeting. Now, we often do budget on a daily basis or on a weekly basis when we are able to get our wages and you want to go and buy things. So everybody is doing budgeting. But if you take any organization, any public sector organization, to ensure financial performance and cash flow management is carefully monitored and managed, annual budget must be accurately allocated by budget center managers across all the 12-month period. So if we are able to allocate it to different cost centers, we will be able to monitor and control how we spend our money. So that is the budgeting phase. And then apart from that, we have the financial management aspect, where the budget management center managers are responsible for ensuring that all income and expenditure budgets are approved, if it's a trust, but the NHS trusts are met, including the individual projects under their budget centers. So if you go to the NHS sector, we have different budget centers for different sessions in the hospital. We have the A&E, we have acute centers, different centers. So we have different budget centers with different managers. We can manage, monitor, and control by making sure that such budget center managers are doing the right thing to ensure that all income and expenditures are approved by the trust. Let's look at the next slide. Delegation. As far as the NHS is concerned, the delegation policy and framework outlines specific responsibilities in respect of commitment to contracts and purchasing goods or services. Such policy framework, if properly followed, will help us to monitor and control all that we do. So, in that respect, all budget center managers are expected to have a high level of financial literacy. And this will ensure they develop and maintain their financial competency. Because how will we be able to monitor and control our finances if we are not financially literate? So that is delegation. Let's look at reporting line managers. Reporting line managers are accountable for reporting their compliance with the approved NHS trust budget for their reporting line on a monthly basis. So all line managers will need to make sure that they comply and that they are accountable on a monthly basis. And there are specific reporting requirements which will be defined by the director in charge. And any material variance or difference must be advised to the appropriate accounting officer for the reporting line and note the reason for any variation. And then any action being taken to mitigate any variance, if there is any variance, and what time frame to mitigate that variance. Apart from reporting line managers, we look at internal audit. We can monitor and control through audit. So audit is also one of the powerful tools that we can use, right? So an audit is simply examination of checking of financial statement by a professional auditor. That involves an examination of the evidence from the final revenue accounts and the balance sheet or other statement, which could be the cash flow or whatever. And that is going to help ascertain that they present a true reflection of the summarized transaction for the period under review. And for the NHS in particular, and most public sector organizations, because all the information are going to be put on the public domain, there is a need for monitoring and control, and they have to demonstrate all that. All right. If you have any question up to this point, please ask me. If you want me to go back to any of the slides, I will just go back and then we'll see what can be done. So we've briefly covered learning outcome 2.1, 2.2, and 2.3. Let's go back.
2.1, 2.2, 2.3.
We have 2.1, 2.2, and 2.3. How we will be able to analyze our financial information available and evaluate its use for decision making. So I brought in the NHS was success financial statement for us to look at. And then we jump onto 2.3, look at different financial decision making, whether it's for investment or any other purpose. To explain that, and we've assessed areas to be monitored and demonstrate how we'll be able to achieve financial accountability. So we've got these three things down. What I will do is to give you a template or a structure of how I want the assignment to be prepared. I'm going to put on Moodle a template starting from the introduction and the body of the report and then the conclusion. And I believe that is going to guide you. And myself and Raman have put a lot of material also on Moodle. And then there are some. Will you be sending
copies of this?
You say?
Will you be sending a copy of this to our Moodle folder?
Yeah. Soon as I finish,
Good.
I end the meeting, I'm going to send all on Moodle for you to have access to that. So
Thank
that you can sit down and digest it. And if there are any questions, any area that you don't understand there, just drop in my email and I will address it as soon as possible. And as I said, I'm going to give you a template structure that you're going to use for the assignment. You have the introduction, the body of essay, and the conclusion with the assessment criteria like 1.1, 1.2, 2.1, 2.2, 2.3 as subheadings within the body of the essay. Right. If you have any question, please ask me.
No, that's fine. And when do you want that? Do you want me to start on that now?
What?
Not until you get the format.
But well, as soon as you've got the template, we start on it then?
Okay. I'm going to put you the template late in the evening. I'm going to download this, send this one on Moodle right now. And then I'll send you the template as soon as I get home from the office.
Lovely. Thank you.
Okay. Right. Thanks a lot.
Thank you.
All right. Bye for now. Bye.
Is that it? Is that the end of the lecture?
Yeah, I think it's the end. Is that the end? That's the end?
Yeah, it's the end of the lesson. Yeah.
Okay.
Okay. Thank you.
Have a nice weekend.
Have a good weekend.
Bye. Cheers. Bye. Bye. Bye.
Bye.
Turn it off first.